We know your focus on Bitcoin, your focus on what is the OG of the crypto space. And I'm interested, first and foremost, on the stealth rally that's kind of taken us by surprise here.
It's always hard to know why Bitcoin's price moves when it does, but in times of chaos in the crypto market, we will often see a flight to security and stability, and the market knows that to be Bitcoin, and potentially thus this week's rally in BTC.
To that perspective, is this, as Ed pondered, a movement away from the contagion risk? Or is this perhaps more of a macro trend, more of tech stocks doing relatively well, dollar on the weakening perspective? Is that what's happening? What do you think?
There's a few forces at play here, of course, especially as is related to Bitcoin's short-term price movements. Where Stillmark is focused, of course, is in the long term and the value generated by the economic activity happening on top of Bitcoin technologies. And we know that adoption continues to advance at a very steady cadence. The price will reflect some of that, as well as the expansion of Bitcoin's utility. So as we see the Lightning Network mature, for instance, and the utility set expand, we understand the intrinsic value of Bitcoin and its underlying technologies to have increased. And so I imagine the price movements reflect an understanding of that as well.
Alyse, happy Friday to you. It's good to see you. You know, we've kind of jumped straight in here to the bigger picture of what's driving the psychology of the market. What was fascinating for me is, you know, Bitcoin's continued to push higher in a week where there was still, I guess, volatility in the headlines, right? The US Securities and Exchange Commission filing, charges or complaints against Gemini, Genesis, claiming that they offered unregistered securities. First of all, I guess, what is your reaction to that action by the SEC?
The action from the SEC was focused on Gemini's Earn product, which was bearing the promise of yield generation. And the SEC has been pretty clear in their focus on custodial-based yield products offered to retail participants. And so this was consistent with that effort. What's interesting is how that matches with activity happening in the Bitcoin space and specifically the Lightning space. There will be a void here where activity that was speculation-based and custodial driven for yield generation in the crypto space, that void can be filled by yield-bearing products or opportunities in the Lightning Network. And here's why. As the Lightning Network has grown in adoption, as it's matured, that's paved the path for a LIBOR to emerge, a LIBOR of the Lightning Network. And what that means is that there's a real rate for yield in the Lightning Network that is tied to the value placed on payment capacity for the Lightning Network. And so as adoption of the Lightning Network grows, as additional assets are introduced to the Lightning Network, for instance, through Lightning Labs' Taro protocol, what we can expect to see is that rate increase. So if we take a look today at the rate of both funds on Lightning Network and payment pathways, what we would find on Amboss Technologies' Magma Marketplace is about a 3% rate of return, which we can expect to see grow as Lightning Network continues to scale.
Alyse, I want to ask you about Sam Bankman-Fried and the latest, his latest comments. But before I do, can I just ask you just to state for us whether Stillmark had any financial relationship with SBF or FTX?
Of course not, because we're focused on Bitcoin and sustainable value propositions to the exclusion of gambling-related activities, which drives a lot of the activity on exchanges today.
I just wanted to be clear on that.
So that would be outside of our mandate.
No, I appreciate that. I just wanted so our audience to know where we stand on that. So now I can ask you about SBF, his blog post, for want of a better description, this week, where he kind of doubled down on the idea that he denies allegations of fraud, that he didn't steal or embezzle any funds. You know, what is your reaction to that ongoing development?
They've all denied the same. So I think there's a fine line between what folks running these sorts of black box schemes believe is permissible in an effort to produce returns versus what they consider to be fraud. But in fact, what appears to have been happening at FTX was that leadership dipped into user accounts to pull funds to take speculative bets on the movement of crypto prices and token prices.
Yeah.
And that's not a dissimilar story from what we saw in the collapse of, say, Three Arrows Capital firm or others similar. And so it's very hard to know where the contagion stops here because there's a lack of transparency in the crypto space. But what it does underscore is the value in technologies that allow folks to have greater control of their cryptocurrency and Bitcoin specifically, or technologies that allow retail investors or participants in exchanges to demand transparency so that you know if you're buying Bitcoin on an exchange, including if that exchange was FTX, that you can ask them to prove that they in fact hold that Bitcoin.
Yeah.
And as we've come to find out, people were buying Bitcoin on FTX, and FTX was never acquiring or holding that Bitcoin on consumers' behalf. The good news is that Bitcoin allows you to be your own bank. That's inherent in the value proposition. And by using self-custody products and doubling down on the value proposition that self-custody Bitcoin can have when you enable a proof of reserve mechanism to prove your creditworthiness as a Bitcoin holder, for instance, we have more tools and resources for folks to opt out of exchanges like FTX.